As the stock market continues to show strength, the housing market is making a rally. I'm going to go over that today on several different articles. Welcome everyone to Real Estate Daily. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage markets. Today is a very interesting day. It's October 4th, 2022, and we have a lot of positive information that's hitting right now. So is the Fed going to pivot? Is the Fed not going to pivot? They had an emergency meeting yesterday. We haven't heard anything come out of it. We're going to go over that and a bunch of other articles today. But before we jump into all of that, please hit that subscribe button. Boom, boom. Let's get that going. Now, the content I'm going to give you today is going to be very, very positive because that's what we're seeing. If you like what you're hearing, hit that like button as well. Now, let's jump right into it. This is a CNBC article that just came out an hour ago. It says high mortgage rates, tight supply, and economic uncertainty. Here's what's happening with home prices. Now, if we look at month to month, overall, we are seeing a very slight difference in the housing values every single month. It just isn't that big. So from July of 2022 to August of 2022, we saw less than 1% drop. Now, the national average, if you bought a home 12 months ago, in August, you still have a significant amount of equity. Over 13% is the national average. So you have quite a lot of equity in your house. That's not counting what you put as a down payment, and then you made payments on top of it. I think it's going to be closing in on the 20 percentile for most people. But we're still up so much from last year. It doesn't show that the housing market's having this issue. Now, what's really interesting is because of economic uncertainty, people are not wanting to sell their homes. They want to stay in their homes. They like the stability of that monthly mortgage payment. It's very, very important to have that. And that's why supply is very tight. Let's jump to the next article. High-end real estate hit the hardest by price declines. I've said this over and over. People before, when they felt they had all kinds of money in their bank account, what happens is they're more open to spending on a bigger and better home. So a lot of my clients that I've had this year, especially ones that are in my sphere of influence, have bought in homes that are just slightly bigger and better, more pricier than the house that they actually left. We're not seeing recently these people moving from a $500,000 home to a $1 million home. I'm just not seeing it. So with that being said, the high-end market, especially in Orange County and LA County, it slowed dramatically down. And we expected this. But what is really hot right now? Yes, entry-level market is still red hot. People want to get in. They don't want to have that uncertainty of your rent payments going up every single year. Let's go to the next one. Here it is. It says home price growth is slowed drastically next year. It should be slowing drastically next year. Well, this is to me, I like this article. It's saying that CoreLogic, which is one of the largest home valuation companies in the world, what they're saying is that home appreciation will go up 3.2%. Now, that's very, very interesting. You know, I really like that it's going to happen. Now, which all comes down to whether the Fed pivots or not. If they pivot and they start adding liquidity into the market, just like the Bank of England did, well, then all of a sudden now interest rates will fall. And guess what happened yesterday? Yep, you got it. Interest rates went down, and they've gone down again today. Why? It's because everyone's anticipating either a stop in the interest rate hike or a pivot where they want to make sure there's enough liquidity in this market to have all the banks solvent and have, all of the stock market strong. Now, are you asking me, is the Fed doing this because there is a big crisis here? Well, it's not necessarily in the United States. Yesterday, the UN, United Nations, actually reached out to the Fed, and I think they actually had some kind of conversations last week and then over the weekend about slowing down the rate of increasing, the interest rates. And why did they do that? It's because if you make the dollar so strong and the debt, and it's a world currency and debt is based off the dollar, well, it's costing a lot of different countries so much more money to actually make their debt payments, to pay down their debt, that it's really causing a liquidity crisis over there in those countries. And we're seeing it. We saw Bank of England bail out, quite a lot, the retirement funds over there. Otherwise, that retirement funds would have just been cut in half, 50%, and then might have been insolvent as well. And people would have lost their entire retirement funds because, managers, hedge fund managers, and the country just wasn't on top of this, right? And they're just like, they're betting way too much money on and borrowing way too much money on other people's money. This is the scare. This is what happened in crypto, and it really collapsed in June. And now we're seeing the bank. Yes, your banks are utilizing your money and they are borrowing it back out. And if they made bad investments or those investments end up not making payments, then it puts a crisis on the banks in which you put your money to keep safe. Next article here, U.S. mortgage delinquencies continue to decline. We're seeing this. And I think that because there's still a strong job market, we're not going to see this happen. Now, is there people out there that are struggling? There are people that are struggling. But guess who the people are struggling? The renters are struggling. We went over an article yesterday with HUD, and they went over last 3 years of 2019 to 2021, and they said that renters were in such a worse financial situation than homeowners. I can't keep saying this over and over. If you are out there and you have a approval letter, you need to go out and look for a home. Now, if you don't want to believe me and you want to sit on the sidelines and say the housing market's going to crash, you can do that. But again, traditionally when housing markets crash, the loan programs are not there and people aren't able to purchase homes. It's great to see a decline in mortgage delinquencies. Next article. All right, let's get to it. What is the interest rates across the United States? Well, now we're looking at conventional went down 8 basis points. We're seeing that. We saw this skyrocket, was heading towards 7, and some of the national media were saying that interest rates actually eclipsed 7, but we're now seeing it float down. There's a lot of positiveness in the stock market and the crypto markets. There's also a narrative out there that the Fed is going to pause or possibly pivot. Now, pivot meaning they're not going to lower interest rates, but what they'll do is if they have to, they'll add liquidity into our system. Meaning, what does that mean? That means print more money, buy mortgage-backed securities, bring down those interest rates, and not make the dollar so strong. So if we're looking at 30-year FHA, we went down 6 points or 6 bips, which got us under 6.5 now, which is really good. We did see 15-year conforming just explode through the roof. I mean, the volatility of the 15-year and the 30-year jumbo is just out of control. I mean, it'll go up and down like some crazy numbers. It's what's happening is all these mortgage companies are really trying to figure out these loan programs that make sense to them to cut down the risk factor, yet be able to loan on bigger dollar amount loans. Okay, so keep that in mind. Guys, thank you very much for joining us. I know I want to make this a 5 or 10 minutes every single day. You can make this on your ride home or your ride to work. You can hear what the best news is, the best 5 to 10 minutes in news, and what you can do about your housing situation that you're in. If you guys have any comments, please leave them below. I read them all. I will answer all of them. If there's any compliments, thank you very much in advance. Guys, take care, and you guys have a good day.